How you doing this Monday?
I'm good. How you doing today, Joe?
Good. I hope you said good because your phone broke up there.
I'm sorry. Yes, I am doing very well.
Oh, good. It was one of those breakups. You could have said, "Oh, I'm doing good," or "I'm no or not good." I'm like, you don't want to hear the investment guy say "not good." How was the market today?
Yeah, today was actually a very good day, and similar to what we saw on Friday, it started out down, not as severely as Friday, and then it just, from midday on, it kind of gained some strength into the close. And today was a lot about, Alcoa earnings just came out right after the market closed, and they beat on the earnings side. They're a little bit light on the revenue side, which is actually a trend that we've seen for many companies over the last few years, that we are seeing earnings growth and we are seeing profits going up, but a lot of it's coming on the expense management side, i.e., which is sometimes labor, and not as much on the revenue side. But overall, this is, this day when Alcoa reports, they're always the first company to report. This kind of kicks us off into earnings season, and so the next 2 or 3 weeks are going to be highlighted by the various companies' earnings reports.
And certainly it makes it a compelling time, but not always just a good time, because we've been talking a little bit about some of the corporate citizens are holding onto their wallets a little tightly right now because we're doing some fundraising for Project Healing Waters, but John's run into this shortfall because companies just don't know what's coming out of the Affordable Care Tax Act. Is that also impacting some of this stuff that may be expanding or growing or marketing into a new project is being put on hold because of unsurety about the Affordable Care Tax?
Well, I think if you look at businesses, there is definitely a lot of concern about how Obamacare is going to play out, and you read mixed reports, and Wendy's came out, I think, a week or two ago and said they now estimated the cost to be significantly lower than they had previously thought, although most of the press I read is the inverse of that, and people are unsure or they're expecting it to be a lot. And so you are seeing that as a contributor to the fact that companies are holding more cash, and that's talked about in the media all the time, how much cash is sitting on corporate balance sheets not being invested. And I think Obamacare is a major component of some of the uncertainty that is causing businesses to hold on to that cash and not invest it, or in this case, it sounds like not even, maybe reduce their charitable giving. But definitely, the stock market has not necessarily played that out. The stock market has been very positive over the last really few years, and especially here over the last 6 months. And yet, the economy, there's still a lot of uncertainty, and companies are cautious in their investments, and yet they're able to continue generating record profits and record earnings more through expense management than pure revenue growth.
Well, I guess that's just a sign that people are looking at management as, all right, they're being conservative about it. They're not getting caught out there. So I can see that being an issue with it. Are there particularly good players as we look into earnings seasons, Mark, that you're hopeful to see that you will be linchpins of a good sign for the next quarter?
Well, I think always you want to look at some of the big, like Alcoa was great to see that their earnings were well and that they're seeing global demand for aluminum up 7% for the year. That's their expectation. And that people generally look at them, even though Alcoa is a relatively small company, but to say, okay, what are some of the base materials demand and what does that mean for the broader economy? But I think it's also important to look at, how the financials do, and we've got J.P. Morgan and Bank of America and Goldman Sachs over the next, I think they start at the end of this week and then early part of next week. As well as some of the big, your Johnson & Johnsons and United Technologies, some of these big bellwether type firms that, I hope we'll see pretty good numbers out of there. The expectations for this quarter are not overly high, so, we could be set up for some positive beats and a little bit of momentum just because estimates aren't very aggressively high. But those are the companies that I'll be following and that I'll be trying to see how their results are extrapolated and analyzed into the broader market.
And do you keep like a couple of different scenarios, like column A, column B? If the companies all do one thing, then you can go one direction or another. Do you get that wound into what they're going to do before you start advising your clients?
That is a really good question, and I try to keep everything on a company-specific basis. So I model out every company that I own and then a handful of companies that I'm looking at as potential investments. and I have my estimates of where I think valuation should come out. And when it gets to a price point that I think it looks attractive to buy it, then I'll step in and buy it. And so I try not to say, okay, these 5 companies have beat estimates, therefore the market's strong, I'm going to go out and just buy a bunch of equities. I really focus on the specific company, their specific earnings power, and their specific valuation, and then react accordingly.
Well, I appreciate it, Mark. You have a great afternoon. Again, you can find him at redwaveinvestments.com or call him at 434-299-8290. Mark, you have a great afternoon. We'll talk to you again tomorrow.